All right. Good morning, December 15th. It's almost gone. I say that every year. Uh, Man, there's 2 weeks left in the year. How we feeling? Well, that's
We're
a good
feeling
sign.
good.
All right. I was about to say, wait. All right.
Great.
All right. Just making sure. Uh, let's roll. Okay. Let's jump number. I'm gonna go through numbers pretty quick today because we've got a lot of articles to talk through. Um, I was looking at Fulton County, and let me scroll over here. On the spreadsheet, you're seeing that taper down of active inventory at the end of the year, which is pretty normal. 527 active status changes. We had 87 go under contract in the last 7 days. A little bit down from the week before, but certainly a better week than we had the week of Thanksgiving. It looks like Fulton County, when it's over 100, it's pretty healthy. So 87 might have been a little bit of an off week, but there's 232 pending in the MLS right now in Fulton County. Looks like we closed out some over the past 7 days and certainly added some under contract. 357 closings in the last 7 days in Fulton County. Now, that's a huge number, almost an end of the month number. Uh, and I mean, I'm just highly encouraged by this, but I pulled this chart up, and I don't know if you've ever played with these charts, but you can take certain variables off. So I left on active under contract, pending, and closed. And this goes all the way back to 2021. So you notice that active under contract yearly is a little bit of a straight line, which means we historically are somewhere between 100 to 150, maybe 200 on big weeks in Fulton County. So at 87, it's probably a low week of properties going under contract. And you can see some of the dips. But the closings, I'm trying to get my head wrapped around, are we doing good, bad, or neutral? And obviously, you see the number of closings that happened, the brown line, over the 2021 period, and then it coming down at the end of 2023, or at the end of 2022, sorry, around here. And then it came down again at the end of 2024, but it sure looks like here was the end of 2024. It sure looks like we're finishing 2025 much stronger than we finished some of the previous years. And I feel encouraged by that. If I run over to DeKalb County and jump into the spreadsheet, you see the same thing, the tailoring down of active status changes. They had 59 go under contract in the last 7 days. It's a little bit off from where they normally are in the 70s, 80s. We had a 90 in mid-November. So certainly a little low week for going under contract, but 144 is pretty healthy for pending properties at DeKalb County right now, and 185 closings. If you look back outside the week of Thanksgiving, you had 185, 169, 208, 190, 207, 185. Those are some pretty strong closing numbers going into the end of the year. And if I did the same thing with the graph here, you see that the end of 2022 had some lower numbers. The end of 2023 had some lower numbers, and the end of 2024 had some decent numbers. But it sure looks like to me 2025, the end of 2025 is stronger than maybe the previous 2 or 3 years. And if I look at Cobb County, wake up spreadsheet. All right, Cobb County. We had 262, same comment, tapering down of active inventory. 46, which is really low, properties going under contract. I think everybody was at holiday parties or something. But Cobb County, the last 3 weeks, has been kind of low for properties going under contract. Previously, they were in the 80s, 90s, 100s, and then they went down to 21 the week of Thanksgiving, 66 last week or the 2 weeks ago, and then 46 this week. There's something's going on in Cobb County where properties aren't going under contract at the normal pace, yet pendings look good with 164, 153, and closings look great. We've got 215, 228, 217. So I don't know, Matt, you're out in Cobb County. What's going on out there?
Yeah, I'd say these numbers seem a little surprising because it doesn't feel like that. But that's what data gives us. So I guess we'll take a look and continue to monitor, but it does not feel like that.
Yeah, and I mean, but the closings are holding and the pendings are holding, look really strong for the end of the year. But if I look at the green line, it's certainly between 60 and 120, but
Yep.
we're kind of coming in a little low on active under contract in Cobb County.
Yep.
What do you see in the numbers, Matt, across the board?
I think you asked if it's good, if it's bad, or if it's just kind of neutral. And I feel like it's just kind of neutral. I mean, I think the positive, optimistic side is things are gradually feeling a little better and better, but it's definitely the market's not bombing, the market's not soaring. And I think that's what we can expect, right? Everything we can expect in 2026 is very similar, gradually getting better. And we have to be hopeful in that and continue to do the right things either way.
There you go. All right, I'm going to move forward. So this is funny to me. I don't know why. Um, the Fed last week cut the interest rate, the Fed rate by a quarter of a point. If you're not aware, they're continuing to cut the rate. Their economic growth and inflation forecast for 2026 improved, supporting a constructive market outlook. They're just feeling like the economy is doing better, so they're pulling the rates down. But what's funny about this is every time this year they've cut the Fed rate, then you go look at mortgage rates and they went up. So I just think it's one proves the point that they're not directly related. But I don't know why. And maybe some of the lenders on here might could explain it to me. But every time they cut the rate, rates go up. They inch up the next week. I just think it's kind of comical in a weird way. But
Well,
go ahead.
if you read the article, it does say that a lot of the mortgage rates are based on predictive expectation. And so, depending on what that aspect or that industry predicts and what the Fed does, then impacts their reaction. And so, if, for instance, if the expectation rates are going down, they may get out in front of it with a rate reduction. And then if it doesn't go down at all or to the significance they expected, they might bounce back up, which would be inverse relationally. So they're interrelated but not correlated, I guess is what I'm saying.
Yeah. Anyway, I still think 6.3 is a good rate. From a projection standpoint, most of what I'm reading from economists is saying that I think the language is they're going to rates are going to be stubborn next year and stay above 6%. Or they're going to fight to get close to 6%, but they're going to stay above 6%. So there's not, I think that's a good statement in the sense that uh, you're not going to have consumers holding out hoping to get some low interest rate because they're just not predicted to move that much over the next 12 months. And anything 6.25, anything between 6 and 6.25 would be a great interest rate buying real estate these days. Somewhere in that range. I think we'll see it bounce a little bit, but nonetheless, these are great rates, and you're going to see some of the talking points. All right, Rick Hale, rewind real estate 10 years. I remember sitting in training rooms with 12 blank calendars printed out in front of me. And I would sit there and do one for January, one for February, one for March for the next year. And I would put on the calendar, hey, I'm going to mail my newsletter on this day. I'm going to have my email drip go out on this day. I'm going to put something in the mail on this day. I'm going to have a client event on this day. And nowadays, you would probably say, I'm going to post on social media these days. Yet I'm sitting here on December 15th asking myself a very tough leadership question that says, what percentage of our agents actually have a marketing plan for 2026 or a lead generation plan all planned out before January 1st gets here? And I'm going to admittedly be completely embarrassed and say, I think less than 5% of the agents have actually made a marketing lead generation plan for 2026 at this moment in time. Matt, tell me I'm wrong.
I unfortunately don't think you're wrong at all. And I would wonder, Rick always says where any of that shows up on our calendar is probably pretty important as well. So I would say it's probably 1% have it completely done at this point.
I think this is a fundamental problem right now in real estate. And
Can we reframe that? It's a fundamental opportunity.
Yeah, we can. That's why I'm bringing it.
Because if 99 or 95 or even 80% aren't doing it, all you have to do is get more granular, more strategic, and more targeted, and then execute. And to Matt's point, if it's not in your day plan or a part of your strategic plan, it doesn't exist. You'll wake up in December having the same conversation.
Yeah, and I'm going to Toya's office tomorrow for team meeting, and I asked her specifically this: can we just scratch the agenda and hand out 12 blank calendars and have a workshop? Because I think that Rick, you're right, and I appreciate the reframe. It is an opportunity. It's not too late, right? And I believe social media is so powerful and so important. Yet I think a lot of agents stopped doing email drips. I think a lot of agents stopped putting anything in the mail. I think a lot of agents over the last couple of years have maybe veered from the fundamental parts of what makes real estate happen. And, I found this article on Inman that says why your real estate email campaigns aren't converting yet. And the author of this article gives 5 suggestions. He says what they did is they shortened the word count, meaning we're probably writing too much. Make them less lengthy. He said they prioritize maintaining their lists, meaning when's the last time you went back and cleaned up your database? And actually, he said one of the most powerful things we started doing is we're sending an email every 6 months asking people if they'd like to be unsubscribed. He says at first this felt counterintuitive, but we actually found it re-engaged people who've been quietly reading but not responding. It also helped us clean out lists of contacts who no longer found value in our content, which is a win in the long run. I thought that was interesting. And then he said, we switched the framework to be more like a social media framework. What's the hook? What's the story? And what's the offer for their emails? Rick, you were joking earlier. You said, what was the tagline of the email? Should be what? Why you shouldn't read this or why something?
Yeah, what I said earlier on our previous call was that, how do you get my attention and grab it? And, this is for you. Like nobody cares about if it's one size fits all, it fits nobody. And so here's an idea too, maybe set place markers each month at the beginning of the month to strategize the message of the month that's specific, not only in a timely nature of what's going on in the world, but also specific to the receiver. And the more tailored, the more likely I am to read it. We can all sniff through generic emails a dime a dozen, not to name companies, but Compass. I get 5 Compass guys sending me stuff. It's the exact same thing. I delete. I don't even watch one of them because I know it's corporate created. And so I think this whole target marketing with AI and with, intuitive sense for what people want to hear and see, I think the days of generic set it and forget it for the year are over if you want optimal results. So I'll qualify
Yeah.
it. Something is better than nothing 10 out of 10 times, but 99% or 80%, all it needs to be is 100% you if you're committed to your business and you're committed to the people in your sphere and your database.
Yeah.
It's a show of love. It's a show of care.
There you go. He said he tested subject lines. And then the other suggestion, he says he segmented the list for personalization. Rick, this kind of speaks to what you're talking about, right? Like the more personal you can make it, the more engaged your audience will be with the content. So in databases today, you can segment luxury versus medium price properties. You can segment townhomes versus single family. You can segment people that don't own a home. You can segment people that are engaged in investing. You can segment single people versus married with kids. Like you could take your database and do a lot of segmentation to it to make it more personal. And he's saying email marketing isn't broken. Most agents are just doing it wrong. And I just sit here and think like, and again, Rick, thanks for the reframing. The opportunity is what if you take the 36 touch out of the Millionaire Real Estate Agent book and just sit down over these next 2 weeks and go, what am I going to do in 2026 and, and calendar it, right? Matt, what do you think? I mean, am I off base here or?
So I would just say I think complexity creeps in, but simplicity has to be chosen. And as we move into 2026, I think this is the filter for every marketing and lead gen decision we have to make, which, like, the truth is simple. Complex feels impressive, but simple plans actually produce results. And I don't believe more leads come from noise or more platform or complicated funnels. I think they simply come from something that is executed consistently. So I think the recommendation here would be what's the clear rhythm? What's the daily lead gen box? What's the follow-up system you never break? And then the business that will win next year won't be more complex. It'll actually be the one that cuts through the noise, the one that's simple and executed without exception versus the complexity nature that we're in now.
Yeah. Here's a thought. I did this back in the day and I would get a 10x return. I have a feeling you get the same return today. I would send out newsletters, hard copy mailed, physical newsletters, branded, and it was the same newsletter to everybody. Clearly, I had a few hundred people in my database. And what I found was when I followed up with a call to confirm that they received it and to get feedback about it, it elevated everything. And I also was able to ask, what would you like me to include in next month's that would be of interest to you? And it just changed the dynamic of the relationship. And I'm not saying every month call everyone in your database, but if you called the select top 20%, 30%, the people that truly are wealth determiners in your world that really are advocates, can you imagine? I even had this silly thought I like to pretend I'm a marketing genius and I'm far from it. But I remember thinking, what if I know where it started. We accidentally sent a batch and my assistant was like, I don't remember stuffing them. And I'm like, that's kind of funny. Like you just sent empty envelopes. And she's like, I don't know. And I'm like, well, I better call and confirm. Turns out she did, or somebody did. But I thought, man, how funny would it be to send an empty envelope and then follow up a few weeks later and ask them what they thought of your newsletter and see how many were honest about getting an empty envelope. And then I even came up with a script. If they said, yeah, it's empty, I was just say, I just wanted you to see what it looks like working with a typical realtor full of empty promises. And I mean, obviously that's a joke, but at the same time, I wanted to be compelling, unique, and disruptive to some degree. I never did that, but I wondered what it would be like if you did send empty envelopes and see, just all you want to do is spark conversation and intrigue, and then let the evolution of the conversation lead to opportunity. I'll stop.
I love that, Rick.
You've got a lot of articles.
Well, I mean, the reality is just maybe this is the moment in time to rethink what have I built my plan for next year? If so, what am I going to do and how am I going to do it? Right, Rick, you're talking specifically to the how. Um, I'll hit a couple other things real quick. So there's an article, I'll let you read it, but it's talking about how content online is being redefined a little bit. And they're talking about like the big mergers of Netflix and Warner Brothers, but there's two talking points in here. One I want to hit. This is talking about how Meta, which is Facebook and Instagram, understands that agents have been quite frustrated with the Facebook ad, Instagram ad platform that they've been running over the previous couple years, and they're promising to have better support around it. And maybe it's something somebody's tried in the past and didn't feel great about it, and then maybe we should try it again in 2026. And I thought about like, back to the marketing element, we used to send just listed cards or just sold cards. And I've always thought, why wouldn't I do a Facebook ad on a just listed or a Facebook or an Instagram ad on a just sold and target market those properties and use those ads in that context instead of putting something in the mail these days? And maybe I'm creating awareness. Maybe I'm showing people I'm succeeding. Maybe it's just fun stuff, but the reality is maybe it's a moment in time when we relook at Facebook or Instagram ads and reframe it in what it means to us, because I think most people did it specifically to get leads. But I almost wonder if this is more of a marketing arm to your business in addition to a lead generation arm versus just trying it for a lead generation platform. The other thing in here that's kind of crazy is I don't know if you're aware, but Australia has banned social media for anybody under the age of 16. And there's a lot of media outlets talking about, is this a good or a bad thing? And da 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 da. But what's interesting on here is says, what's this mean for real estate professionals? It says, well, audience assumptions are no longer stable. Agents should audit who they're actually reaching, not who they think they are, and avoid building strategies around any single demographic or platform. Regulatory shifts can change the feed overnight. Flexibility and audience awareness matter more than ever. It made me think of TikTok. Like if there was a real estate agent that built their platform solely on TikTok, and there was a regulatory shift around whether or not TikTok was a platform or not, versus whether or not they ban under 16-year-olds on social media, you should have a diverse offering where you're not just on one platform, but multiple platforms. And you certainly, Gen Z is 16-year-olds are in the Gen Z generation, one, and two, I was thinking like, okay, at what point would 16-year-olds start buying houses? Probably not for another 9 years. But ironically, I was at a holiday party, and there was a gentleman there who had a 15-year-old daughter. And he said, my daughter loves real estate. She sends me houses all the time. And I'm thinking, she's 15. And he's like, yeah, she's so in tune with real estate. And I thought, okay, well, maybe that's the future buyers of tomorrow, or maybe the 15-year-old sending their parents properties, and you're reaching that age demographic that's influencing buyer decisions. I don't know. I just thought it was an interesting talking point, that maybe we should have a, diversify our platforms more. I think about LinkedIn, and I heard a comment recently that said most of luxury consumers are on LinkedIn. And that there's a higher propensity for luxury consumers on LinkedIn platforms. And I thought, well, that's probably because they're the more professional people that have higher net worths. But it was an interesting comment that made me think, because admittedly, I don't do squat on LinkedIn. Maybe I should, right? Um, just food for thought. Moving on. All right. We talked last week about how there's lots of economist opinions around what's going to happen in the real estate market. And there was an article about Compass's economist on LinkedIn or on Inman. And here's what they think. Their economist says they expect home sales to climb by just under 4% next year, which, remember, NAR was predicting 14% increase next year. Zillow was predicting between 3 and 4%. I hear we're going to sell more houses next year, which I think is a positive thing. And then they're projecting home prices nationally will tick up just 0.1%. I think that most economists agree that home prices, while hyperlocal matters on a national level, are going to be pretty doggone flat next year. And I think some of the pockets in Atlanta will have good price appreciation. And I think some pockets might actually have some price depreciation. So it's definitely a hyperlocal conversation. But by and large, there's not going to be a lot of price appreciation going on next year. And then their economist projects mortgage rates will average 6.4% next year, which I feel like is a little high. I don't know. What do you think of those?
I remember sitting around going, if only we could get this thing down to a number that starts with 6.
Yeah.
So I think anywhere in the 6 still historically low, and it's about finding the right house for all the right reasons for people, or investing for all the right reasons and applying the current dynamics. Because to your point, I don't see a significant shift below that in interest rates that would cause you to pause. And I don't see any downside to buying now. And if it's all about the narrative and the story and the way you project to the people that need the story.
There you go.
So
Well,
it's going to be what it's going to be. That's what I heard. And the good news is it doesn't appear that there's a lot of volatility on the horizon immediately, short of something significantly unforeseen.
There you go. There's 3 other articles I'm going to skip. I'm going to let y'all read them in circle. But there's a really good article on the Atlanta Business Chronicle that's titled Atlanta Has More Homes for Sale, but Affordability is Still a Problem. And it talks about our inventory levels. Our inventory levels are back to 2019 levels. And data shows that landing housing supply has rebounded to its pre-pandemic level, but monthly home sales are coming in around decade lows. Affordability is a problem as elevated price and mortgage rates make homeownership unattainable for many. But there's some really good graphs in here. And you can see back in 2019, our inventory levels are back to the 2019 levels, which is a positive thing. And then, but home sales in Metro Atlanta are still lagging behind pre-pandemic levels. So is 2025 good or bad? It's still yet to be seen. We're waiting to see what the final numbers come in at, but it's probably pretty consistent to what 2024 numbers were. The median sales price is dropping. So you're seeing that the median sales price in the summer months was 440, and right now it's 410. Don't freak out on that. That happens every year. The price is always highest in the summer and comes down by the end of the year. Yet, if you're comparing October 25 to October 24, you'll see we're down about $5,000. So we're starting to see some price depreciation, and but the median sales price obviously over 2019 has gone from 263 to 410. in. So there's still price appreciation over time, but in an annual basis, you're seeing we went backwards the last 2 years in prices, just ever so slightly. And is that a good or a bad thing? It's probably a healthy thing, which means we're right setting our market with affordability. We're letting affordability catch up to price appreciation right now. And the affordability gap is starting to get a little bit better. And that's healthy for us long term. I'll let y'all read through these articles. I always encourage you to. Any thoughts, comments, questions on anything we covered today? Maybe I need to bring less articles to the table so we can go deeper.
No, but I appreciate all the insight that you shared, especially with the like basic marketing skills and creating a marketing plan. I think that's important for visibility. Because why would we pay the middleman for lead generation when all we need is visibility? So I appreciate you reiterating those facts. And I'm excited to see you tomorrow, team meeting. Yay. Whoop, whoop.
Awesome.
Thank you for sharing. Anybody else? Keith Shark gave us a thumbs up. That's good.
I like the stats we just last showed showing how the affordability is coming back to normal, and that we those price numbers compared to December last year is a little bit lower, and kind of showing that graph that this is low season, and then we can communicate to our buyers that, hey, in January and onward, it's going to really spike up. So buy now.
I love it. Well, listen, guys, we're in the holiday season. I hope you have warmth in your heart and not just in your body. It's cold outside. I see Jeff Morabito with a beanie on. So we will talk to you soon. Have a good week.
Take care, everybody.